Let's begin talking about financial statements. We want to do a brief overview here. Now, this discussion is not intended to make you into a CPA. And if you're a CPA or accountant, following this will be remedial for you. Let's begin by looking at the chart of accounts. Think of the chart of accounts as your hub for all your accounting activity. Every transaction you enter into QuickBooks must be coded to a chart of account. For example, if we want to write a check to Staples for office supplies, we have to come down here and tell QuickBooks what account to charge it to. We would not want to charge it to bank charges. We would want to charge it to office supplies. Office supplies is an account in our chart of accounts. Back here to the chart of accounts. Every line on the chart of accounts represents a line on our financial statements. Let's go over and look at a balance sheet. Here is our balance sheet. It shows our cash balance at $54.52. This top section of our balance sheet represents assets. It always begins with the most liquid assets first and then moves down to the most illiquid assets. So of course cash is shown first and receivables is normally next, followed by inventory and then property, plant, and equipment. Down here is our total assets. Notice the last category of assets on our balance sheet. Fixed assets. These are the most illiquid assets we have. In other words, converting them to cash takes the most effort. The next section on our balance sheet is our liability section. This is everything that we owe. Our total liabilities right now are $48,779. And the third and final section on our balance sheet is the equity section. This is the most confusing section of all the financial statements. Think of it as the book value of the business versus the market value. The market value can be quite different from the book value. Equity represents what the owner or owners have contributed and taken out, along with the net earnings or loss to date. So in other words, if we decided to sell Rock Castle Construction today and we decided to sell it for book value, that means we would sell it for $175,193.79. We would then turn around and have to pay liabilities off of $48,779. And then we would have and be able to pocket the rest of the cash. That's book value, and that's the equity section. The last thing we want to say about the balance sheet is the balance sheet is always at a point in time. This balance sheet is as of December 15th. Now let's look at an income statement. Let's come here to Company and Financial, and let's look at a standard profit and loss. Here, the top section of the income statement is all of our income. We have total income December 1st to December 15th of $58,110. Down here is our cost of goods sold section next, and then all of our expenses. Once again, every one of these accounts that has a line on the financial statements comes from the chart of accounts, a line in the chart of accounts. The income statement has a bottom line. This bottom line shows net income of $36,857.57. That's what our net income after expenses is for this period. Let's go back once again and look at the chart of accounts. Here, the chart of accounts, every line item here is represented on the financial statement. Next, we're going to talk about accounts and account types and how this column determines where the account appears on the two financial statements.